I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for InstitutionalAdvisors.com. Welcome to the show, Bob.
Yeah, good morning, Jim. Good to be with you and good to be with our listeners.
The rally in precious and base metals continues, but it's kind of reaching a special point, isn't it?
Well, yeah, I remember back at Christmas time, we were looking for two things. One was that the bottom in precious metals, particularly gold, would likely end the cyclical bear market and start a cyclical bull market. And the other was that we would get a good rebound out of base metals, but that would be kind of like a seasonal rally out of a very oversold condition. So, indeed, both rallies have been terrific. And trading this week, silver has become extremely hot. And it's moving up relative to gold, which is, that's pretty well the way it works. If you've got a rally in precious metals, silver will outperform gold, and that has been happening, particularly in the last 4 or 5 weeks. And this week, as I said, with particular enthusiasm for silver and the silver stocks. So one of the benchmarks we use is to take the silver-gold ratio and then use a momentum thing on it called the RSI. And when the daily RSI gets up to 78 or higher, it's an indication that the speculation in silver is becoming exceptional. And so yesterday it was at 78, and in writing pointed out that this is up now to levels that become a warning. And then, boom, today, earlier, silver was up as gold was down, and that RSI got up to 84. Well, this really got my attention. But we used this in 2011 when the silver-gold ratio, I think it was in April or May, got up to 92. That's the daily RSI. And in looking back, we knew that the only other time that RSI had got up to that level was in January 1980, which was a huge once-in-a-generation peak for gold and silver. And then you went through that long bear market. So here you had then the ratio in 2011 up to 92, and we advised that this had only happened in 1980, and sort of rationalized and said the bear market wouldn't be as bad as what followed 1980. But we learned, Jim, that the bear market you're in is always the worst in history. And so then that went down and bottomed, and we had a few indicators that suggested that it would be a cyclical bottom for the sector, and it does look like that. So here we are now, and the last time, this is off memory, I haven't had time to really look at the details, but going back to 2011, you had the first sell-off in the sector down, and then it became oversold and rebounded up until September of 2012. And then the RSI on that rebound got up to 84. And we advised again that this was dangerous, showed speculation was becoming compulsive. And so we've used it, I think, about 5 times. It's given a sell signal. So here what we're looking at now is this is a very dramatic bull move out of a very oversold market. It is now, as of today, very overbought. And we've earlier advised, that, for example, Pan American Silver, PAAS, had been giving upside exhaustions and a number of technical signals. And now we've got this other signal. So the idea would be to continue to take some money off the table. It's been fabulous. And one of the other things about the chart is that you had a terrific rally for precious metals in 2001 in the midst of that bear market that followed the tech bubble of 2000. And that tech bubble didn't bottom until 2002. So what happened was you had a terrific rally for the precious metals before that bear market for the big market had ended. And then something similar happened in 2008. You had the precious metals come down to oversold in, I think it was October, brilliant rebound. And then a strong correction. And the overall pressures in the stock markets didn't conclude until March 2009. So we think that although they've got senior indexes like the S&P well up there, we take a look at the broader market on the NYSE comp, which symbol is NYA. It's made a moderate rebound, quite possibly getting overbought in year. So there's an interesting similarity here that, number one, you've got the precious metals using a measure that has been reliable for us, exceptionally overbought. So let's then look for a correction in the precious metal sector. It would likely be a tradable correction for those who are pretty nimble. And then on the base metals, which have had terrific rally as well, this one may not be the start of a cyclical bull market. And so I think it can correct right down back to or pretty close to the lows of January. Then the other one that has got legs, of course, is crude oil, and it's right up to the 44 level. We thought, of course, that was one of the other ones. We played the seasonal on crude oil for an expected low in January, and then a recovery out into the spring, which is what we're getting. So we want to take a look at crude oil for excesses in here, and also at the oil patch stocks, the XLE. We'll look at that. And we also, the base metals have had some terrific moves, like Tech Corp. I think the other day I saw 10% up in one day. I mean, these things are amazing. And so we're looking now for excesses there. And, of course, with the joy in crude oil, this has really helped narrowing credit spreads. And we've played the seasonal on that one at exciting times in the market before. And just to go back on this one, because in June 2015 is when we were looking for that year's narrowing to end, and it did, I think, late May, and then turned to widening. And in July, if it broke out on the chart, that would be a warning that there'd be big problems in the credit markets. And of course, this showed up with the crash in Shanghai and all kinds of excitement. So the spread reached its worst with weak commodity prices in January, and it's been narrowing exceptionally well recently. Again, two reasons. One, the seasonal into towards May or June, and then the other, the terrific relief rally going on in crude oil.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Bob Hoye. Bob, we have a question from a frequent listener, Chris Barsky. In their insane pursuit of negative interest rates, the central bankers moved from buying government paper to corporate bonds, inflating in the process the biggest bond bubble in human history. What will happen to the central bank's balance sheets when the bubble implodes and their bond holdings collapse in value by 20 to 30% or more?
Yeah, Chris, that's a good one. Every once in a while I pray that the Federal Reserve System was a publicly traded stock so you can short it. But it's not publicly traded. The central bankers have been pursuing a theory that they should have known would not work. But then that's a very pet theory, and that is if you intervene in the marketplace, you can make wonderful things happen. And as we've argued any number of times, this is basically intuition. They, one, assume a national economy. There is no such thing. It's an international market. And two, they look back in history and see that on each business expansion, there's been an expansion of credit, and they think there's a cause and effect there when it's merely correlation. They think that expanding credit forces business activity, and that's not the case. So then they go about themselves assuming a national economy, not true, and that if they push credit out, it'll force business expansion, and that's not true either. Both of them are just plain lazy intuition that seems for some reason very attractive. Now, the only reason why these guys are employed at the central bank is because that theory helps build large government, currency depreciation. They just love it. So the Federal Reserve System and any other central bank exists to fund an experiment in unlimited government. That's required unlimited funding, and we all know that perpetual motion doesn't last forever. So on the question, yes, I think that the banks who have been aggressively buying bonds are going to get hit on a huge price hit, because we know that the Federal Reserve was buying mortgage-backed bonds and treasuries, and so you've got the built-in risk there with a credit risk, and then on the treasuries they hold, they got a term risk. So I think that they can embarrass themselves quite magnificently here, and I'm looking forward to it. We look at the TLT as a proxy for the long bond, and it got up to 135 earlier in the year, and then each rally since has been to a lower high. I think it's down around 128 now, and the last rally was to 131.5 or 132. So there's a downtrend in highs on that. So we'll just see what happens. Every once in a while, we'll take a look at European yields, and they have not really making a turn to any uptrend in yields. But at some point it will. Perhaps a slowing of the economy will slow down tax revenues to states and also to federal governments. So they're not without risk. And they've got themselves into a very awkward position. If I were working as a central banker, I'd be finding a way to retire. These guys are going to get hit something awful. Good question, thanks.
Well, if there are massive losses, who's going to cover them?
Taxpayer?
Oh, the handy old taxpayer.
Oh, yeah.
Like there's 50 of us for every one taxpayer.
Yeah.
Because if you have 8 layers of government, they each consider, oh, well, if we just up at 10%, they can afford that.
Yeah. Well, it's been 100 years of experiment in authoritarian government. Each country has gone about it in its own way. Even the United States, which is a country dedicated to freedom, it's gone as far as the regard for freedom goes. But it can be retrieved. I'm actually very positive on the future. I can see a massive reformation coming in, similar to what happened in the late 80s in Eastern Europe, where they threw off the communists. And at that point, your average person, taxpayer, he had to stare down border, the guards, the palace guards with the AK-47s, and in let's just say Canada and the United States now, certainly the authoritarian governments have a lot of power, but it's just all propaganda. They will never ever use AK-47s or tanks on the public. So all one has to do is break through the immense power of political correctness. So I think it'll go hand in hand. The next contraction will show that all the theories about big government and central planning and central banking are not working, and the average person can figure that out. So let's call it a new bull market for common sense.
Chris says, how long will it take politicians to wake up and do away with central banks?
It's going to take more than a 1 or 2 business cycles, but every time there's a recession, that will then give power to the argument that they can prevent recessions. You take a look at the promotion in 1912, 1913 in establishing the Fed. People then knew that when you had a financial upset, a contraction, that a recession followed. So then these guys figured with the Federal Reserve, you could then have the lender of last resort, and you could come in and you'd prevent a financial setback, and then you'd prevent recessions. Great theory, purely intuitive, and there's been 19 recessions since the Fed was opened its doors in January 1914. So it'll take a few business cycles to accomplish it, and I think a central bank has some utility if it's constrained by a gold standard, and that is possible sometime in the future.
Well, Canada has just sold off all of its gold. So much for a gold standard here.
Yeah, well, you can't. They're a bunch of fools. As fools in the sense that each central banker, I'm sure, whether it's in Canada or England or wherever, really thinks that they're doing good. But the problem is they all are working on the interventionist theory, and that isn't doing good. So it'll be up to the public. There's no way that the central banking community will ever practice self-criticism.
Well, we did see the former heads of the U.S. Fed and the current one get together for dinner, and they seem to do nothing but clap each other on the back for job well done.
Oh, yeah, for sure. Look at, in December 2007, that was the start of the worst recession since the 1930s, Greg Menke, an economist at Harvard, boasted that nothing could go wrong because the Federal Reserve had what he called, in quotations, a dream team of economists. So the establishment then boasted that nothing can go wrong. So then 2 years later, when it had gone horribly wrong, they get up there and then they say, without our efforts, the crash would have continued or been worse. So just right there, the system has no ability to criticize itself because what it said could not happen. They then boast afterwards that they prevented it from getting worse than it was. I mean, it is pathetic, absolutely pathetic. And as I say, ordinary people you don't have to be an old market pro or trader to know that it's nonsense. The next recession will probably see it. The folks in Eastern Europe figured out, take a look at the promises of the governing classes, looked at how well those promises were working out, and they weren't doing so well. They also looked at how well the governing classes were living with all the perks and privileges and took them on and said, you're out of here. And the Berlin Wall came down, and that was a very important symbol on it. And here you have had the Obama administration legislatively, and through rules and regulation, creating the equivalent of the Berlin Wall, which really needs to be taken down, and I believe it will be at some time, metaphorically speaking.
Were those Occupy Wall Street people right?
Oh, no, that was a self-interested Marxist movement, and but a criticism of free markets. But you can't call Wall Street now a free market. It's in the throes of regulation. Wall Streeters believe in the magical powers of the Federal Reserve. I mean, the free market system and capitalism, if you want to call it, and the financial markets, as focused in New York, have been corrupted by the experiment in authoritarian government. As I said, the Reserve is corrupted to the point where its main objective is to fund an experiment in limited government. And it's not going to work out. As I say, the next recession will wake people up, I think. I'm looking forward to it. So I'm actually a very positive person here.
Bob, have a great weekend.
Yeah, we'll talk to you next week, Jim.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward questions like Chris's or comments about the show to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.